What's up, everyone? My name is Ale. Welcome back to my world of stocks. Sorry for being gone for a little bit. I was actually on a trip visiting some friends, ended up taking longer than I was expecting, but I'm back now. I've actually got 3 videos coming out just this week alone, and I'm already working on more videos for next week as well. So it's going to be a lot of fun. I hope you guys enjoy all of this. But it is actually good to be back today, specifically with my favorite monthly series on the channel where we cover 2 specific topics: all the stocks that I purchased or sold last month, which was September 2021, and all the stocks that I'm thinking about buying or selling this month here in October. And this is a pretty interesting time right now because, in my opinion, the stock market is still way too high, but there are definitely some opportunities out there in individual stocks, and I've seen a lot take some big hits. And so I've made a lot of moves, actually made a lot of purchases last month, and I'm going to be making even more here in October. So we've got a lot to cover today. Let's go ahead and dive into this. We'll start with everything I did last month in September. We'll talk about any of those stocks, if I'm going to continue to buy into October as well. And then we'll also talk about more stocks that I'm also looking at here in October too. So a lot of fun. Hit the like button if you enjoy this. Let's dive straight into it, starting with September. And as is often the case with me, I did not do any selling last month, but I did go ahead and make quite a few purchases that I'm very happy about. There's actually a total of 6 stocks that I added to my position, and then a 7th stock that was actually a brand new addition to my portfolio. So let's quickly run through those. And first one here was Verizon, ticker symbol VZ, which I purchased around mid-September for right around $54 a share, as well as some more shares in late September for a little cheaper than that too. And the biggest reason why I purchased this one was just to lower my cost basis a little, since I am still down like over 8% on my overall position. I'm down quite a bit on it. Currently, my cost basis is $57, and thankfully the stock is still trading lower than that at around $52 a share. And it's been about flat over the past 5 years, and also sits at the very bottom of their 52-week range. So even though I don't really want to be overly exposed to them, since I only really like them for the dividend, I just feel that this is a pretty good buying opportunity for what is essentially one of the leaders in wireless and internet, given that they trade around 50% cheaper than the sector with a dividend that is quickly approaching 5%. That's just too attractive to ignore. So I think I'll keep buying this one here throughout October as well. Moving on though, I told you guys last month that I was going to buy some more shares of Merck, ticker symbol MRK, and that's exactly what I did. This is a fantastic dividend pharmaceutical stock that I bought some more shares of at around the middle of September for around $72 a share. And so far, it's been looking like a great pickup as the stock has now climbed up to the $80 range. Now, that quick surge was mostly because of a new pill developed by Merck to treat the pepperoni that apparently is being reported that it cuts hospitalizations in half. Now, if the pill does take off, this could be a huge revenue generator for Merck, who already has a huge pipeline of over 75 drugs in at least phase 2 or phase 3 trials. Still, for me, this is primarily a dividend play, and that's where they really shine, because even at these higher levels, they're still yielding over 3%. I probably won't be buying any more at this time though, since I am already up a bit on my position, but I'm happy to hold on to it long term and maybe even buy some more shares on any future dips. Really do like that dividend. Okay, next up, I purchased some more Teladoc Health, ticker symbol TDOC, which I'm very bullish on long term, as they're essentially the leader in remote healthcare, which I think is going to be a gigantic market in the future. Last month, I bought some more shares in the $130 range, and this month here in October, I even bought some more in the $120 range, but since then, the stock has climbed back up a little bit, back to the $130 range. But here's the thing, so far, Teladoc is still down close to 60% from their highs, and the more that it falls, the more I'm going to be buying, because this is a super high growth company with over 80% revenue growth this year and still close to 30% growth next year expected as well. And when I look at the future of healthcare, I just think Teladoc will be one of the most important companies of that future. So I'll keep buying here in October, and especially in the $120 range if they fall back there again. All right, next up, I also purchased some more of Zynga, ticker symbol ZNGA, which is a fairly new addition to my portfolio. It's a mobile gaming company that has huge potential in the $175 billion gaming market, where, by the way, mobile gaming makes up over half of that and accounts for the vast majority of growth in gaming as well. The stock, however, has been crashing for a while now, currently down about 40% from its highs and sitting at the very bottom of its 52-week range. But they've got some really good IPs and licensing deals, including a new Star Wars game that is coming up for the Nintendo Switch. So I personally feel bullish about their future despite the pessimism in the market and among analysts and investors. And so I went ahead and bought some more shares in September at a little higher up in the $7 range. I just think that Zynga is trading at a fantastic price right now, and I'm definitely going to keep buying this one here in October. Okay, now speaking of stocks that have been crashing a lot, you guys know that I had to go ahead and buy some more of the Chinese e-commerce giant Alibaba, ticker symbol BABA. I know, big surprise. I've been buying it a lot, but this is a stock that has been getting crushed because of Chinese regulatory pressure and investors panic selling it. And even with a recent bounce back of over 17%, that was, in my opinion, way overdue, this is a stock that is still down by almost 50% from its highs, all the way down to the $160 range, turning what has always really been considered a growth stock into what I now feel is more closely related to a value stock. Not only does Alibaba put up solid growth rates every year of well over 20 or 30%, but they're now trading for about the same price as the sector on a non-GAAP P ratio basis. And that is just crazy to think about, considering they have the most e-commerce and cloud computing market share in all of Asia. That's a huge deal. I actually bought my September shares quite a bit lower in the $140 range, and then again in the $130 range here in October before the recent pop-up. So I'll probably ease my buying a little now since I've already purchased so much of it in recent months. But in the 160 range, Alibaba still looks like a solid long-term stock, and especially any lower than that. Okay, just a couple more to go here. And during the time that I was buying the Chinese e-commerce giant, I was also tempted to buy the American version of that e-commerce giant, and that is, of course, Amazon, ticker symbol AMZN. And I know this might come as a bit of a surprise here since Amazon is such a giant stock that doesn't normally drop much, and you guys know that I do like to buy my stocks when they're going down. But if you haven't really been tracking them lately, just because they're so big, you kind of forget about them, well, you might actually be surprised to find that they are actually negative for the year and trade in the bottom half of their 52-week range. Don't get me wrong, they're still up a huge amount, but now the current share price is in the $3,200 range, and I actually bought them a little higher in the $3,300 range back in September. But personally, I still think that Amazon will one day be a $4,000 stock, so I have no problem buying more at these ranges, especially since companies like Apple and Microsoft are both trading well above a $2 trillion market cap, and I don't see any reason at all why Amazon shouldn't be right up there with them. And finally, I'll just mention the newest addition to my stock market portfolio that I just barely started buying right near the end of September, and that is Scotts Miracle-Gro, ticker symbol SMG, which I went ahead and purchased at right around $150 a share, which is right around the same price that they trade today, with the stock currently down over 40% from its highs and right near the bottom of the 52-week range. So yeah, you can bet that I'll be buying some more of this one here in October as well. At these prices, you not only get the world leader in home gardening, soil, and fertilizer, but you also get a huge play on the future of CAN. Hope you know what I'm referring to there, but that is especially the case through their hydroponics Hawthorne division, which grew, by the way, by almost 50% last quarter. But you also get a nice little dividend that is approaching 2% with a super low payout ratio and 12 consecutive years of growth, meaning that it'll likely never get cut. Plus, the stock price itself is cheap with a trailing PEG ratio that is almost 20% cheaper than the sector and a forward ratio that is about even with the sector as well. Anytime you get a world leader for about the same price as the sector, that's almost just a no-brainer buy, at least in my opinion. Almost, that's almost always the case. Okay, now let's move on to the stocks that I plan to buy here in October. And before we do that, I'll just quickly recap the stocks from September that I still plan to buy here. Excuse me, and I'll also rank them from most interested down to least interested. So just to quickly recap for you guys. So I think Verizon would probably be number one just because I really do need to lower my cost basis on that one. I'm down like over 8%, maybe close to 10%. Then I'm down on my overall position. Plus, I also really like the dividend. Number two, I think would probably be tied between Zynga and Scott's Miracle Grow. Both of those I really like. And then I'd say after that is probably Teladoc. All of those stocks I'm definitely interested in buying, but there's a couple more here in October that I will be watching very closely for opportunities. One is a dividend stock, the other one is a bit more speculative, but both of them I really like long term. So let's dive straight into those. And starting off with the dividend stock, that's going to be the renewable energy dividend stock that I just recently started buying this year in Brookfield Renewable Partners, ticker symbol BEP, which is a stock that I'm currently down on by over 6%. And really, anytime that I'm down over 5% on a position, that's when I really like to start buying more heavily. And in this case, I just think BEP is trading at a fantastic price as they are currently down close to 30% from their highs and sit right near the bottom of their 52-week range, leaving them with one of the best dividends in the renewable energy space at over a 3.3% yield. Couple that with the very solid profitability that grew by over 10% a year over the past decade and is expected to grow by another 15 to 20% a year through 2025 as well, and the diverse energy profile across hydro, wind, and solar with a development pipeline that is even larger than what they currently produce. And I think I'll probably have a long-term winner here in the renewable energy space. At least that's my opinion. At these prices and with that dividend, I'll just continue to be buying this one. Okay, and then just to finish up here with the last stock of today's video, it's going to be a little bit of a speculative one that I already own, but I do really like long term, that I'm watching very closely, and that is Robinhood. Ticker symbol is HOOD, and this is a stock that I recently purchased for the first time ever at that recent IPO, and I bought that stock right at that IPO price of $38 a share, and ever since then, I'll be honest with you guys, I've regretted that I did not buy more of this stock. Well, it just so happens that the stock has been super volatile since then, skyrocketing all the way up to $85 a share before gradually crashing back down to the low 40s, where they sit today right near the bottom of their trading range. And Robinhood is a heavily debated stock. First of all, the reason it climbed so high in the first place was mostly because of Redditors kind of pumping up the stock. There was a lot of kind of short-term trading really pumping it up, and that caused a short squeeze, and that's what made the stock really climb and surge so high. But I never thought that it should be trading at those super high levels anyway, at least not yet. Instead, I really feel that this is a long-term stock, and this is one that we will see Robinhood perform very well and on a more sustainable level over many years out into the future. And that is because they just have so much opportunity in being the go-to stock market investing platform, especially among young people with an average age per user of only 31 years old. And when you couple that with their really solid business model, what you're going to end up with here is a never-ending cycle of growth kind of compounding on top of itself. New users will continuously be added when they come of age, and those younger users will grow older, and then they'll spend more money on investing when they generate more money themselves, which we clearly see happening by just looking at the different cohorts from each year and how they continuously deposit more and more money into their Robinhood accounts, which does translate over to a growing revenue stream per cohort for the company. And we can also see that through the early signs of Robinhood's revenue just really surging, sometimes growing by hundreds of percent a year. And again, all the meanwhile, Robinhood is continuously replenishing that younger pool of users with new ones that enter the market, and you can see that by their users growing by millions every year. So it's just a fantastic business model overall, and while it does rely heavily on Robinhood remaining relevant, I just don't see their brand getting any weaker, at least not anytime soon. Every time I talk to friends or family, we talk about investing in stocks, they almost always bring up Robinhood. They mention they like using it. It's very streamlined. And I just think that it's kind of similar to how Tesla is for EVs in terms of their brand strength and awareness. I feel that Robinhood is kind of that version, but for the stock market and for stock market investing. But it doesn't even really stop at stocks. Robinhood also offers commission-free crypto while also offering unique features and services like commission-free options, early IPO access, which I actually use myself to buy Robinhood stock at that IPO price, and especially fractional shares, which is my favorite because it really allows practically anyone to get started in the stock market regardless of their budget. Of course, the fear is that governments will one day ban the sale of trading data, which is how Robinhood generates the bulk of their revenue, but that's the trade-off you have to make in order to offer commission-free trading, which I think is a worthy trade-off, and I don't really expect it to get banned, at least not here in the States, so I think a lot of people would be really upset with that. Anyway, I just see so much potential with Robinhood, and that's why I really want to be adding more shares to my position, and here in October, it looks like I'll have some opportunities to do that. But there you have it, guys. Those are the stocks that I've been buying or selling that I continue to look forward to here in October as well. Let me know if there's any stocks that you guys are interested down below. Like I said before, I've got more videos coming for you guys. Going to be talking about a lot more stocks, so don't worry about that. We're going to have lots of variety on the channel. Let me know what stocks you guys want me to review. Leave that down below in the comment section so I know to make those videos for you guys. Let me know what type of videos you guys want to see and what stocks you're thinking about buying or selling. Love to hear all of that, and maybe they'll get featured in a future video as well. Thank you so much for watching, everyone. I really appreciate all the support. Hope you enjoyed the video. Hope you're all doing well. I'll catch you in the next one. Take care. Bye-bye.